Let me tell you about a woman named Margaret. Pause. I didn't know Margaret personally. A friend of mine taught at the same school. But her story stuck with me, the way certain stories do, the ones that make you realize you've been thinking about something completely wrong. It's March 2009. The world is on fire. Lehman Brothers collapsed 6 months ago. Retirement accounts have been cut in half. Every headline sounds like the opening chapter of a disaster novel. People are pulling their money out of the market as fast as they can because every single expert on television is saying the same thing. It's going to get worse. Margaret is a school teacher, not a Wall Street analyst, not a hedge fund manager. A school teacher. She takes $50,000 money she'd been saving for a house down payment and puts it into an S&P 500 index fund. Her friends thought she'd lost her mind. Her family begged her to wait. The market had just dropped 57% from its peak. Waiting seemed like the obvious, rational, responsible thing to do. Margaret didn't wait. Pause. That $50,000 is worth approximately $590,000 today. She didn't pick individual stocks. She didn't have insider information. She didn't study charts or read analyst reports or do anything that would qualify as sophisticated. She just recognized something that most people couldn't see through the fear that the worst time to buy is usually the best time to buy, and the best time to buy usually feels like the worst idea you've ever had. Now let me ask you something. What if I told you we're standing in front of a similar moment right now? Not a market crash. Something different. Something that arguably has even more potential to create ordinary millionaires than 2009 did. And just like 2009, almost nobody is paying attention. Pause. The number is $124 trillion. I'm going to say that again because it doesn't register the first time. Numbers that big just bounce off the brain. $124 trillion. That's more than the entire annual economic output of every country on Earth combined. More than 5 times the current U.S. national debt. And it's about to change hands. Over the next 2 decades, approximately $124 trillion in assets will transfer from one generation to the next. It's being called the Great Wealth Transfer, and it is the largest movement of money in human history. Nothing in recorded economic history comes close, and most people, most smart, financially aware people have no idea it's happening. Pause. Let me back up for a second, because I think the story of what happened after 2009 explains why what's coming matters so much. After the market bottomed in March 2009, something extraordinary happened. Not fast, not overnight, but steadily. Relentlessly, over the next 15 plus years, the S&P 500 didn't just recover. It went on the longest bull run in American history. Over 900% growth from that bottom through early 2026. The index crossed 2,000 inches 2014, 3,000 inches 2019, 4,000 inches 2021, 5,000 inches early 2024, 6,000 by late 2024, 7,000 inches, January 2026. $100 invested at the bottom became roughly 1,000. Pause. And here's the part that always gets me. The people who benefited the most weren't the Wall Street guys. Weren't the hedge fund managers with Bloomberg terminals and algorithms. They were teachers, nurses, accountants, small business owners, people who did absolutely nothing clever. They just kept putting money into their 401ks and IRAs while everyone around them was panicking and pulling out. The data tells the story better than I can. In 2010, the United States had about 8.4 million millionaire households. By the end of 2024, just 14 years later, that number had nearly tripled to almost 24 million. 15 million new millionaire households. In 14 years, That's roughly the entire population of the New York metro area crossing the $1 million line. Not through crypto, not through startups, not through anything exotic. Through the boring, unremarkable act of staying invested while the market did what markets do over long periods of time. According to UBS, the U.S. added 379,000 new millionaires in 2024 alone. That's more than 1,000 new millionaires every single day. Most of them became millionaires, the same way Margaret's $50,000 became $590,000 by being present and patient while compounding did the work. Pause. Now, let me tell you why I think the next 20 years might create even more millionaires than the last 15. The baby boomers born between 1946 and 1964 currently control approximately 52% of all wealth in the United States. That's roughly $78 trillion concentrated in a single generation. The youngest boomers are turning 62 this year. The oldest are approaching 80. And over the next 2 decades, this wealth is going to move to their children, to their grandchildren, to charities, into markets, real estate, businesses, and investment accounts. Pause. I had coffee with a financial planner. I know older guy. Been in the business 30 years, and I asked him what keeps him up at night. Not in a worried way, in an excited way. He looked at me and said, "Marcus, in 30 years of doing this, I have never seen anything like what's about to happen. The amount of money that's going to move in the next 20 years, most people can't even conceptualize it." And then he said something that stuck with me, softer. He said, "The tragedy is that most of the people who could benefit from this have no idea it's coming. And by the time they notice, the people who position themselves early will already be 10 years ahead." Sound familiar? That's exactly what happened in 2009. The information was public, the opportunity was visible, and most people were too scared or too distracted to act. Pause. Let me break down where this money is going, because the flow matters as much as the total. Generation X, the so-called forgotten generation, stands to inherit approximately $39 trillion over the next 25 years. That's roughly $1.4 trillion per year flowing to people currently in their mid-40s to early 60s. For a lot of Gen Xers, this arrives at exactly the moment we were talking about in a previous video, that critical decade of the 40s and 50s when retirement either comes together or falls apart. Millennials will receive approximately $46 trillion, most of it arriving as they enter their peak earning years. Think about what happens when inherited capital stacks on top of career income during your highest earning decade. The compounding effects are enormous. Even Gen Z will start seeing significant inheritances as the transfer accelerates through the 2030s and 2040s. Pause now, and this is the part where I want to be honest with you, because I see a lot of content about the wealth transfer that I think is misleading. Most people are not going to inherit a life-changing amount of money. Let me say that again because it's important. The $124 trillion number is real, but it's heavily concentrated. About 62% of the wealth being transferred comes from high net worth and ultra high net worth households, roughly 2% of all families. A small number of people will inherit massive amounts. Most will inherit modest sums. Many will inherit nothing. So if your retirement plan is wait for the inheritance, that's not a plan. That's a lottery ticket. Laugh softly, but here's what I think most people miss about the wealth transfer, and it's the part that actually matters for regular people like you and me. The opportunity isn't the inheritance itself. It's what $124 trillion in moving capital does to the economy around you. Think about what happens when trillions of dollars flow into investment accounts. Asset prices rise, which benefits everyone who's already invested. When heirs purchase homes, real estate appreciates, which benefits existing homeowners. When inherited capital funds new businesses, job creation accelerates, which benefits workers across every industry. When money moves at this scale, it creates rising tides across multiple asset classes simultaneously. You don't need to inherit a dime to benefit from the economic expansion that $124 trillion in motion creates. You just need to be in the water when the tide comes in. Pause. Let me tell you something that happened to a buddy of mine that I think illustrates this perfectly. He didn't inherit anything. His parents are alive and healthy, thankfully, and they're not wealthy by any stretch. He's a project manager, makes decent money, but nothing extraordinary. What he did starting around 2011, 2 years after the bottom was set up, an automatic investment of $500 a month into a basic S&P 500 index fund through his 401k and a separate brokerage account. Nothing fancy. No stock picking, no timing, just $500 every month, like clockwork. There were months he didn't want to. 2011, the European debt crisis headlines said the euro was collapsing. 2013, the government shutdown people were pulling money out. 2018, the trade war. His coworker cashed out his entire retirement account because he was convinced the market was about to crash. 2020. Well, you remember, 2020. Every single time, the headline said, "This is the end." Every single time, it wasn't. By early 2026, his combined accounts had crossed $250,000 on a project manager's salary, with zero inheritance, zero stock picking, zero sophisticated strategy. Pause. And here's the part that always makes me laugh. His coworker, the one who cashed out in 2018, still hasn't gotten back in. Missed years of recovery, missed the rebound from 2020, missed the run to 7,000, sitting on a savings account earning 3% while the market tripled. Goldman Sachs actually researched this. If you missed just the 10 best days in the market since 2009, your annual return dropped from roughly 17% to about 12%. Miss the 25 best days and your returns get cut nearly in half. And here's the kicker. The best days almost always happen during the most volatile periods. The days when fear is highest. The days when every instinct tells you to sell. The people who stay in the water catch the waves. The people standing on the shore waiting for calm seas never get wet. Pause. So let's get specific. Because I know what you're thinking. Okay, Marcus, the wealth transfer is real. The opportunity is real. What do I actually do? And honestly, the answer is going to sound almost disappointingly simple. But that's kind of the point. The strategies that create millionaires almost never sound impressive. They sound boring. They sound like something your dad would say. And then 20 years later, you realize your dad was right and you wish you'd started sooner. Laugh softly. First, and I know this sounds basic, but the number of people who don't do this is genuinely shocking. Max out your tax-advantaged accounts, your 401k, your IRA, your HSA if you're eligible. For 2026, the 401k limit is $23,500, with an extra $7,500 catch-up if you're over 50. These accounts let your money compound without getting taxed every year along the way. That tax drag matters more than you think over 25 years. Second, stay in the market broadly. Don't try to pick which sector will benefit most from the wealth transfer. Own the whole thing through low-cost index funds. As $124 trillion flows into various investments over the next 2 decades, broad market exposure means you participate in the aggregate growth. You don't need to be right about AI or clean energy or real estate specifically. You just need to be present. Third, and this is the one I wish someone had told me 20 years ago, extend your time horizon. Think in decades, not quarters. The wealth transfer spans 25 years. Position accordingly. The monthly market movements that the news obsesses over matter almost nothing compared to 25 years of consistent participation. I know someone who checks his portfolio every single day. Every day. He texts me when it drops 2%, like there's been a death in the family. And I always want to say, brother, you're 43 years old. You're not touching this money for 20 years. What happened today is noise. What happens over 20 years is signal. Pause. Fourth, and this one's practical, in a way that I think people overlook, build cash reserves for moments of dislocation. The wealth transfer isn't going to be a smooth line upward for 25 years. There will be recessions, corrections, crises that make 2020 look mild. Headlines that convince everyone that this time, it's really different. Those moments, the ones that feel terrible, are where the biggest opportunities live. Having cash available when others are forced to sell is one of the most reliable wealth-building advantages that exists. Not a lot of cash. Just enough to deploy when fear is running high and prices are running low. Margaret didn't plan to be a market genius. She just had capital available at a moment when fear had made everything cheap. That $50,000 was ready when the opportunity showed up. Most people's $50,000 was already committed to a lifestyle that couldn't flex. Pause. Fifth, and this one might not apply to everyone, but think about it. Consider the geography of where wealth is moving. Not all real estate markets will benefit equally from the transfer. Markets where younger generations want to live will likely see more capital inflow than markets they're leaving. The same $500,000 deployed in a growing city versus a shrinking one could produce dramatically different outcomes over 2 decades. I'm not saying uproot your life. I'm saying if you have flexibility, pay attention to where the money is flowing. It's not subtle. The data is there. Pause. Let me put some numbers on all of this, because I think numbers make it real in a way that concepts don't. A 35-year-old today who invests $500 a month in diversified index funds for the next 25 years, roughly the duration of the great wealth transfer, ends up with approximately $665,000 at the historical average return of 10%. At a more conservative 7%, it's around $450,000. Now, if the economic tailwind from $124 trillion in moving capital pushes average returns even 1 percentage point higher than historical norms, those numbers shift meaningfully. That 7% becomes 8%. The $450,000 becomes roughly $475,000. Bump the monthly contribution to $1,000, which becomes achievable for a lot of people as their careers progress, and the numbers scale accordingly. At 10%, you're looking at $1.33 million on a regular salary with zero inheritance, through nothing more exotic than consistency. Softer $1.33 million from $1,000 a month and 25 years of not panicking. That's not financial wizardry. That's patience monetized. Pause. Here's what I keep coming back to when I think about all of this. Every major wealth creation event in American history has one thing in common. The information was public. The opportunity was visible. And most people didn't act. After World War II, the GI Bill gave returning soldiers access to housing and education that built the middle class for half a century. The information was public. Most people who qualified used it, but not everyone. The bull market from 1982 to 2000 was the longest sustained wealth creation period in American history up to that point. The S&P rose nearly 0% from the early 1980s. 401ks were available to millions of workers. The information was public. Not everyone participated. The bottom was visible to anyone with a brokerage account. Stocks were literally on sale at half price. The information was public. Most people were too terrified to act. Pause. And now the great wealth transfer. $124 trillion. documented in research reports anyone can read, analyzed by every major financial institution, spanning the next 25 years. The information is public, right now, today. The only question, and it's the same question it's always been, is whether you'll do something about it or let it pass while you're distracted by the next headline cycle. Pause. I think about Margaret sometimes. Not because she was brilliant. She'd probably tell you herself she wasn't doing anything special. She just had clarity at a moment when everyone else had fear. She saw the same crash everyone saw. She felt the same anxiety. But somewhere in there, she made a decision that most people couldn't make, not because they didn't have the money, but because they didn't have the perspective. She didn't know March 9th, 2009 was the bottom. Nobody did. She just knew that fear had made things cheap, and that cheap things tend to become expensive things if you give them enough time. Softer, that's not genius. That's just patience combined with the courage to act when everything around you is screaming don't. Pause. The great wealth transfer isn't a market bottom. It's not a single moment you can time. It's a 25-year process that's already underway. The oldest boomers are 79 in 2026. Transfers are happening right now, today. While you're watching this, there is no perfect moment to start. There's just the difference between starting now and starting later. And every year you wait is a year of compounding you don't get back. I know because I waited, and I have a very specific, very expensive number in my head that represents what that waiting cost me. Pause. The tree you plant today is the shade you sit in at 65. The money you invest this month is the freedom you feel in 20 years. And the difference between the people who catch this wave and the people who watch it from the shore won't be intelligence. It won't be insider access. It won't be luck. It'll be the same thing it's always been. Slower, presence, patience, and the willingness to act on information that everyone has but almost nobody uses. Pause. $124 trillion is moving. Millions of new millionaires will be created. That's not speculation. That's math applied to demographics. The only question is whether you'll be one of them. Pause. If this one made something, click. Send it to someone who's been nationally safe, sitting on the sideline waiting for the perfect moment. Tell them the perfect moment was yesterday. The second best moment is right now. And if you're wondering how the same systems that create this opportunity also keep most people from ever capturing it, that's exactly what we're covering. Next, pause. We're just getting started.